Hi everyone, welcome to another video tutorial on the concept of cost and management accounting. In our journey so far, we've discussed cost accounting, we've seen the advantages, the functions, we've discussed the classifications of cost, the various methods of costing, we've spoken about the elements of cost, we've discussed cost sheet, and we've also seen how we can go about treating the various levels of stock that you would find in an organization. In this particular video tutorial, we would try and carry out an exercise trying to see how we can go about with the preparation of cost sheet. So we will start off with this video tutorial by looking at a question. Now, when we look at the question that is being displayed over here, it tells us prepare a cost sheet of the following data relating to the manufacturing of bulbs. They've also given us an information saying that the number of bulbs manufactured in a month is 1000, and they've given us a number of expenses. So let's look at these expenses one by one. Depreciation of machine, direct labor, direct materials consumed, factory lighting, factory maintenance, factory rent, indirect labor, miscellaneous office expenses, office rent, office salary, sales, salesman salary, supervision cost in factory, warehouse rent. Now, as soon as we get a question like this, we have to go about with the preparation of cost sheet. But first thing that we need to do is we need to try and identify the quantity. So what we see over here is that in the question, they've specified that for this particular exercise, we are carrying out manufacturing of 1000 bulbs, which means the given information to us is supplied for the manufacture of 1000 bulbs. For this, the various expenses has been given to us. The moment we get a question like this, the first thing that we need to be doing is we need to understand where exactly these elements of cost would be falling, and depending on that, we would have to try and see which division of cost would this fall under. So what I'm going to be doing right now is I'm going to be navigating away from this particular screen, and we would try and look at this from another screen point of view, just to try and see how we can go about classifying these costs into different categories. So I'm just going to be quickly changing my screen, and I would be loading up an Excel here for you. Okay, so what we see over here is that we have the different expenses which has been given to us. Now we would try and see which of these divisions of cost would this fall under. Now, depreciation of machine would fall under factory overhead. Why? Because our machinery is part and parcel of our manufacturing activity, and that is what we would be incurring as the factory. Direct labor is a part of your prime cost. It is self-explanatory from the format. Next is direct material consumed. This refers to the cost that you incur for the raw material. This again would be a part of your factory cost. So sorry, prime cost. Next we have factory lighting. This would be a part of your factory overhead. Factory maintenance, again factory overhead. Factory rent, this is the rent that you pay for your factory premises. Again, this is a part of your factory overhead. Indirect labor in factory. Now it is very clearly stated to us in this particular question that the indirect labor that you have incurred is for your factory. So this would be a part and parcel of your factory overhead. We have miscellaneous office expenses. This would be a part of our office overhead. Office rent, office overhead. Office salary, office overhead. Sales is what we would be deriving at the end of our cost sheet. So that by itself is a part of sales. Salesman's salary, remuneration that you pay for the people working in your sales department, part and parcel of your selling and distribution overhead. Supervision cost in factory. Now this is the remuneration that you pay for the supervisor. This is a part of your factory overhead. Warehouse rent, this would be a part and parcel of your selling and distribution overhead. Now that we have placed all these items, we are able to categorize these items. Let's get about with the preparation of the cost sheet. Now, whenever we go about with the preparation of the cost sheet, please remember we would always be starting with direct material. So the direct material that we have used in the organization is it is given to us as 45,000. Now, what we also know is that the quantity is for 1000 bulbs. So this would be 45 divided by 1000, which would make sure that it works out to be 45,000 divided by 45,000 divided by 1,000, which makes it up to be 45. The next expense that is being given to us, which is part of parcel of our prime cost, is a direct labor. Direct labor in the question is given to us as 18,000. So 18,000 divided by 1,000, that would be 18 rupees. Now, these are the only expenses, prime expenses that we have. So when we add up all this together, we would get the prime cost of the firm. So prime cost of the firm is 45,000 plus, it is 45,000 plus 18,000, which is 63,000. So this will be 63 rupees per unit. Okay, so that would be 63 rupees per unit. Okay, so now let's move on. Now we have to take into consideration our factory overheads. Now, which are the factory overheads that we have? So we would start off with factory rent. Factory rent, we know it is 3,600. So factory rent is 3,600. So when we work out cost per unit, that will be 3.6. Okay, that will be 3.6. So in my case, what is happening is my Excel is ending up rounding the figures. So I'm just going to quickly make some modifications over here so that that doesn't happen. So I'm just going to be changing the adjustments here to make sure that that doesn't happen. Okay, so that is 3.6. Okay, now the next expense that we would be taking into consideration here would be factory maintenance. Factory maintenance, what we've come to know is that that is 500, or in other words 0.5. Then we have depreciation on machinery. So depreciation on machinery, we had discussed this earlier. This is the depreciation that you charge for your machinery. That is 1,200, or that per unit it works out to be 1.2. Then what we have is factory lighting. Factory lighting for us in this particular question works out to be 1,350, or in other words per unit that works out to be 1.35. Then we have indirect labor at the factory. So factory indirect labor, works out to be 5,600. 5,600, or in other words, this is 5.6. Okay, so let me add some more spaces over here so that I could work out the remaining calculations. Okay, so we have taken into consideration indirect labor as well. Now we need to take into consideration factory supervision cost. So factory supervision cost. Factory supervision cost is 2,250. So cost per unit is 2.25. 2.25. So with that, we've taken into consideration pretty much of our all our factory expenses. We could cross-check here as well once, just to see if we have taken everything into consideration. Oh yes, I think that's pretty much it. So now we need to total up the factory overhead. So we need to calculate the total factory overhead. So when we add up all this together, we get the total as 14,500. Okay, or cost per unit will be 14.5. Okay, 14.5. Okay, so now next division of cost is prime cost plus total factory overhead, which works out to be 77,500. Okay, so 63 plus this works out to be 77.5. Now we can move on to the next division. The next division that we would be having is the office overhead. Now, what are the office overheads that we have? The office overheads that we have are, let's discuss one by one. We have office rent. So office rent is 18,000. Okay, so that works out to be 18 rupees. Then we have office salary. Office salary is 4,500. So this is 4.5. Then we have, okay, let's just quickly try and see, have we missed out on anything? I think there's one more item that I think I've missed out. So let me just cross check that. Okay, we have miscellaneous office expenses. So miscellaneous office expenses. Miscellaneous office expenses is 2,250, or this is 2.25. Okay, we have one more expense. I'll just quickly confirm which one that is. Okay, so I think I've pretty much taken everything into consideration. Okay, now let's total up all our office overheads. When we total this up, we get the total to be 24,750. So that divided by 1,000. Okay, now we need to calculate cost of production. So cost of production is factory cost plus total office overhead. Okay, so now let's total that up. Okay, so that works out to be 102 rupees and 25 paise. Now let's move on to our selling and distribution overhead. Okay, so I just think I've made a typo error over here. So I'll just quickly have that corrected. So it should be read as selling and distribution overhead. So total selling and distribution overhead. So under our selling and distribution overheads, what are the expenses that we have? The expenses that we have are, we have warehouse rent. We have the warehouse rent. So warehouse rent, okay. And warehouse rent works out to be 13,500. 13,500, or this works out to be 13.5. Okay, then we have salesman's salary. So salesman's salary is 4,500. So that is 4.5. Okay, I'll just quickly cross-check with this sheet just to see if we have taken everything into consideration. Yes, we have taken everything into consideration. So let's total this up. So 13,500 plus 4,500, that works out to be 18,000. Okay. And okay, so that works out to be 18. Now we have to estimate the total cost. So total cost is sum total of your cost of production plus selling and distribution overhead. Okay. Now that works out to be 1 per unit, 120.25. Now what has been given to us is that the sales has been given. So sales is given to us as 1,40,000. Okay, 1,40,000. Now that is the sales. However, what we need to also remember is we have profit, which has been mentioned in the in the cost sheet format. Now here, this will work out to be the balancing figure. So how do we calculate profit? So that will be sales minus total cost. Okay, sales minus total cost. Okay, so with that, we have come to the end of the preparation of our cost sheet. Okay, so we have prepared the cost sheet and looks like our cost sheet is pretty much done. And we have estimated the balance sheet from a balancing figure, which is the profit from the given details. So just in case if you wish to refer to this question, I have uploaded the details, the link to this question and the solution in the description. You can refer to that as well.